Hello class, this is Dr. Fenton. In this chapter, we are going to talk about cost management in an automated business environment, and it relates to ABC, ABM, and TQM. So let's see what all these letters mean by getting started. First of all, let's talk about using a single company-wide cost driver. We're going to use one allocation base to allocate total overhead cost to all the jobs in production. A little example they have here is that during an 8-hour day, this company produced products in 2 jobs. Job number 1, they used 2 hours of direct labor, and job number 2, they used 6 hours. So there's the 8 hours. They also consumed $120 of utilities during the day. So the key is, how much of the $120 should the company assign to each job? Just like we saw in the last chapter, we use allocation-based cost drivers to allocate overhead cost to production. So if we're going to use direct labor hours, let's take the total utility cost of 120, divide by 8 hours, and so it's $15 per hour. So we're going to assign this overhead cost, utility cost, to the jobs based on the number of direct labor hours used for each job. That means that if job number 1 used 2 hours, we'll take 2 hours times 15 per hour, and so $30 of the $120 will be allocated to job number 1. And job number 2, it used 6 hours, 6 times 15, $90. So that's where the 120 ended up. 90 applied to job number 2, and 30 to job number 1. So what we're doing, again, with this overhead area and these indirect costs, we're trying to find a way to attach these manufacturing costs that cannot be directly traced to a job or a unit, have to attach those somehow to those production processes going on. Here's one way to do it. We can use direct labor hours and divide that cost up based on how much each job used in direct labor hours. Okay, that's simple enough. And you can use one company, allocation rate if you want to. Company used to do that in the past. They were very labor intensive in the past, and maybe one allocation rate, usually based on direct labor hours, was good enough and fairly accurate and fairly fair to attach those overhead costs to the units being produced. But automation has come along, and so we're using more machinery and less labor. So if we look at an automation example here, and so they say here that job number 1 stays the same, 2 hours of direct labor. Job number 2 now requires 1 hour of direct labor only. Why? Because they automated job number 2's process, more machinery and so forth. So now what we have is utility cost and depreciation charges for those new machines using job number 2. And so we have to allocate this total of $420 between the 2 jobs. Now if we still use direct labor hours, look at the result. Job number 1 uses 2 hours, and we're going to allocate $140 per hour to job number 1, and 2 hours, and so $280. Now where'd the $140 come from? It's the total overhead cost, utilities and depreciation, divided by 3 hours. Only 3 hours here because job number 1 still used 2 direct labor hours, and job number 2, being more automated, used only 1 direct labor hour. So we only have 3 hours to spread around here. So it's $140 per hour. So we allocate $280 to job number 1, and job number 2 only 1 hour, so $140. So that's how we would allocate the $420 of utilities and depreciation cost if we still used direct labor hours. But is this fair? Job number 2 uses probably more utilities now, more automation, and has higher depreciation cost. So this is probably not a fair way to allocate these costs. What we could use is something besides direct labor hours, like maybe machine hours. So you can see this is probably not a fair way to allocate this kind of overhead cost if you have more automation, but now you're trying to allocate it still based on the old system using direct labor hours. Let's look at another example. Here we have a company producing soup. They produce vegetable soup and tomato soup. Now, they run various batches here. So they'll set one batch up to produce so many cans of vegetable soup. They'll stop it. They will clean the tanks and get everything set up to now make tomato soup. When you do this, when you're setting up for the new batch, new different kind of product, you're going to incur setup cost. Okay, and so when we look at this, they expect that it will cost them $264 every time they have a new setup. Now, during the year, when they made almost 1 million cans of vegetable soup, they had 180 setups because they switched back and forth between producing vegetable and tomato, went back and forth. They had 180 batches of tomato soup. And so we had 360 setups during the year. And so if we have 360 setups during the year, and it costs $264 per setup, we have $95,040 of setup cost. These are overhead costs that we need to now apply to the vegetable soups and tomato soups to get their various costs. Now, if the company decides, we're going to allocate this setup cost based on number of cans produced, then you would take the $95,040 divided by the number of cans of everything produced during the year, 1,188,000, and that's 8 cents per can is the allocation rate for setups. So vegetable, 8 cents times the number of cans produced there, 76,320. Tomato soup, 8 cents times 234,000 cans, so 18,720. So we, under this method, would allocate a lot more cost to vegetable soup than tomato soup. We did produce a lot more cans of vegetable soup, but is this really fair? What cost are we trying to allocate here? We're trying to allocate the setup cost, the total setup cost for the year. Well, if each type of soup uses the same number of setups, because you're switching back and forth, you might run this for several days and this for several days, but you still have 180 for each one. Would it be more fair to allocate setup cost based on number of setups? And if we do, with 180 each, you see that we really should allocate the same amount of cost to each soup line here. No matter how many cans we produce, we have the same number of setups, the same number of batches being run. Let's do that. So here, if we allocate it based on setups, then you'll take the $95,040, total cost to be allocated, divided by 360 setups, and now take 264 times 180. So 47,520 is allocated to vegetable. And now we have tomato, 264 times 180, same amount. So some people would think this is a better way to allocate these costs, these setup costs. Do it on the number of setups for each product that you're producing. So that's what we're getting at here. You're trying to find, for a certain cost that you have, what is the best cost driver? What's causing this cost? Here, number of setups. Well, if number of setups are causing these costs to increase, maybe we should allocate these costs based on the number of setups. So let's look at the next page. Let's now talk about activity-based costing. So activity-based costing, or ABC, you can see here, gives you the definition. I'll let you read this for yourself. What it's doing is we're finding various activities that generate cost. We are going to accumulate those costs by activity and call that a cost pool. And then we're going to allocate the cost pool dollar amounts to the products based on how much of that activity they use. All right. From this point on, the discussion is going to get very detailed, a lot of numbers flying around. So, please pay very close attention to this. Okay, let's get down to here. All right. Under a traditional costing system, we have overhead costs, and usually those are accumulated by department. And so as product 1 goes through department 1, you'll allocate some of the overhead costs from department 1 to product 1 based on how much activity product 1 used, there in department 1. Then when it goes to department 2, it'll pick up some department 2 overhead. Each overhead has one allocation base. Product 2 will pick up some of department 1's cost and department 2's cost. You're dealing with one rate per department, and maybe a relatively few number of departments. Now, the activity-based costing system groups cost into pools for each activity center, and usually you have a lot more than just 3 here. So now as product 1 uses some of the activities 1 center activity or production or whatever, you allocate cost to product 1 based on a cost driver specific for activity center number 1. Same thing for activity center number 2. You look at the cost pool here, allocate it based on how much of this activity product 1 used. Again, you can have a different allocation base as well as number 3. So overall, activity-based costing is probably more accurate than traditional. You have fewer cost pools, here they're just departments, fewer allocation rates, drivers. Here we're trying to really distinguish the various activities in production, not by department, but by activity, and we call these activity centers. We can have unit level activities, batch level activities, product level activities, and facility level activities. Now this footnote, if you probably cannot read this here, but these type costs will be covered in more detail in chapter 6, okay? But just know that we're talking about unit level, batch level, product level, and facility level activities. We have an example here of a shirt maker. Now, I'm going to skip ahead one page and come back to this, but skip ahead one page. What this example that's very detailed is going to do is finally end up right here, showing the difference between allocating overhead. All the next discussion is going to be just about overhead. Materials and labor, those are direct costs. They go straight to the dress shirts or casual shirts that you're making, no matter what type of allocation base you're using, traditional or ABC. And so materials, labor, the same. Overhead will be different. Under the traditional method we're going to look at in a minute, we use one overhead rate for everything. Looks like we have a gross margin per shirt, $8.84, no matter what type shirt you're making, a dress shirt or a casual shirt. ABC, though, goes into more detail, allocates the cost probably more accurately. When we get through with these numbers, we can see that we're allocating a lot less overhead for dress shirts and a lot more for casual shirts. It's making the numbers down here look different. You have more gross margin when you sell one dress shirt. It looks like you're losing money, losing gross margin when you sell one casual shirt. So the example I'm getting ready to go through, that'll be quite lengthy, we'll come back to this to see only across this line here how you're allocating the overhead. So let's go back. So here we're back at the previous page. We had the example of a shirt maker. It looks like for the production process for the whole year, we incur $5,730,000 of overhead cost. We make 800,000 shirts, 680 dress shirts, 680,000 dress shirts, 120,000 casual shirts. So that adds to 800,000, divide. So $7.16 per shirt is how much overhead we allocate to each of those production lines, dress shirts and casual shirts. Now, if we get into activity-based costing, we look at, again, various activity centers. A unit level activity center is a cost involved for making the various units. In this scenario, usually the more units you make, the more this cost is going to be. It could be machine related, it could be machine maintenance, it could be indirect material, indirect labor, but this is a a unit level activity. Unit level activity. The accountant has said, all right, putting this all together, for this activity center, the cost pool is $1,296,000. So out of the original $5,730,000 we had in total overhead costs for the whole company, $1,296,000 relates to unit level activity. Okay, so we're starting to split up this total overhead cost. And we have $1,296,000 identified for this activity. What we're going to do then is divide this based on direct labor hours. The accountants and management decided, looking at all information, probably direct labor hours would be the best way to allocate this. So during the year, the dress shirts used up 272,000 direct labor hours. The casual shirts only 48,000 hours. Well, if we take the cost allocated to this cost center and divide by total hours, right here, 320, it's $4.05 per hour. That's the allocation rate per hour for the various shirts we're making. So the total overhead cost for each of these areas, we're taking the 405 times 272 for this first one, 1,1016,000. The 194.4 is $4.05 times 48,000 hours. So we've allocated this $1,296,000 between the dress shirts and the casual shirts. Number of shirts made, divide total overhead cost for each type of shirt by the number of shirts made for each type, and we get $1.62. Just happens to be the same here. Even with all this work here, this is the same. Now, it's not going to work this way on the others, but it's the same here. $1.62 for this cost for the shirts. Batch level activity. Sort of like a previous example, we had setup cost. Batch level cost are like setup cost, and you incur it based on number of batches you have, not number of units you're producing in each batch, by the number of batch. A batch, to start a batch, costs money. The accountant has identified $690,000 of that $5 million and some odd dollars as total batch level cost. Now we need to allocate this between dress shirts and casual shirts. We're going to do this based on setups. So number of setups performed for dress shirts, 1,020. Casual shirts, 1,280, for a total of 2,300. We take the number of, or the amount of setup cost in total for the whole year for everything, divide by the number of setups, and get $300 per setup. Because it takes setup cost to start a batch run. Okay, so $300 times number of setups for dress shirts. 306 is allocated to dress shirts. Casual shirts, we have 1,280 setups times 300, 384,000, a little bit more. If we divide this by number of shirts, though, we allocate it based on batches. But to give an idea how much per shirt this is costing us, divide by number of shirts being produced, and it's 45 cents per dress shirt, but $3.20 per casual shirt. We have more batches, more setup cost, but producing fewer shirts. So we have a lot more per shirt, not per setup, per shirt of this allocated to casual shirts. Product level activity center. Patents, copyrights, trademarks, brand names, and so forth, engineering costs, and so forth. The accountant said, all right, we should have $1,800,000 allocated for this activity. Now let's divide the $1,008,000 between the two different types of shirts. Come down here, and this will be divided, based on a number that the accountant came up with. She said that overall, she believes, based on her studies, 70% of these product level costs, not per hour per setup, but 70% in total should be allocated to casual shirts and 30% to dress shirts. These are her estimates, right? So if we do this, we will take 30% times 1,008,000 and get $540,000 for the dress shirts. 70% times 1,008,000 gives us a lot more for the casual shirts, 1,260,000. So we divided up the 1,008,000 for this product level cost between dress shirts and casual shirts, just based on her studies on how much of the total cost should probably be allocated percent-wise to each type of shirt. So doing this, divide by the number of shirts again, you can see this is 79 cents per shirt is the cost for dress shirts, but $10.50 for casual shirts. Again, quite a bit more. Now, facility level cost, these can be like manufacturing, plant appreciation, security, landscaping, plant maintenance. She identified 1,944,000. Again, after her studies, that's what she came up with for these facility level costs. Let's allocate this between the two different types of shirts. So, she believes that 85% of the facility level cost should be allocated to dress shirts, only 15% for casual shirts. They don't explain why, but those are just her numbers given to us. So 85% times 1,944,000, 1,652,400. 15% times this, 291,600. We've allocated the total facility level cost between these two different types of shirts. Per shirt, 243. Sure, here happens to be the same, 243. Happened for the unit level cost, happened here, sort of a fluke. It doesn't happen very often where they're exactly the same. So we've gone through 4 categories here, and they could be more categories than this. So read the rest of this page yourself, and let's go to the next page. Now, let's put it all together. Now remember, under the traditional approach or the ABC approach, we had $5,730,000 to divide up and get allocated to dress shirts and casual shirts. Under the ABC system, we had 4 cost centers. These are the costs the accountant came up with for each of these centers. Again, they don't tell us the details and how she came up with that, but those are the numbers. And now we did go through all the numbers a minute ago for each level and saw how much of each of these centers' cost we should allocate to the dress shirts and how much to the casual shirts. Divide by the number of shirts being produced. So $529 is the overhead cost we should allocate to a dress shirt per unit. $17.75 is the amount for a casual shirt. A big difference in the per unit amount. So this goes back to what I was first led off with on this long example, was that under the traditional approach, where all the overhead costs were lumped in together, divided by total number of units being produced, same per unit, no matter what you are producing, a dress shirt or a casual shirt. Materials, labor were the same, and so it looked like we were making the same profit or gross margin on the two different types of shirts. Under ABC, again, materials, labors, they don't change. Overhead is different. Per shirt, it's $529 for dress. Casual shirts, $775. So maybe we're actually losing money on casual shirts. Since based on our studies, our best estimates, it looks like a lot more cost should have been, compared to the traditional system, should have been allocated to the casual shirts. And again, maybe we're losing money. So we could have been over-costing the dress shirts earlier and under-costing the casual shirts. So what you do now is say, we cannot lose money. Can we lower the price? Read this discussion. It says maybe you cannot change the price because of just the market price out there. Maybe you got to go back and look at your production line, try to save costs someplace. Maybe cut down on the number of setups. You maybe change something else. Look at your upstream and downstream cost. So again, read this yourself. And now I get to total quality management. For this topic, I do not want to go into a lot of detail I would like to just cover the basics, give you the definition, not going to worry about a bunch of numbers. Read through this first part yourself. Talks about various items here that relate to quality and the cost of quality. This graph, I'm not going to give you this on the test. Don't worry about it. I'm not going to have you talk about on the exam a quality cost report. Let's just see what this total quality management area is all about. So here's the definition. TQM, management strategy that focuses on 1. Continuous system problem solving by personnel at all levels of the organization to eliminate waste, defects, and non-value added activities. You're trying to become more efficient and you're trying to eliminate as much cost as you can. And number 2, managing quality cost in a manner that leads to the highest level of customer satisfaction. This relates to production. Let's eliminate waste, defects, non-value added activity. A non-value added activity would be like moving the product from one part of the warehouse to the other. Nothing's being done to it, you're just moving it. So if you can redesign the layout of your factory floor, maybe you can cut down on the movement time. That's a non-value added activity. It also relates all the way to the customer. We want to give the customer the highest level of satisfaction. So that's a quick synopsis of total quality management. Close this, go to the next page, and we're at the end of the chapter. So, read through this self-study problem on your own. I'm going to hit the high points in this chapter. It's very detailed. You might have to watch this video again, but please go back and read the chapter and follow all the numbers through and all the examples. So, good luck with your studies.